Hey folks, Dan Frio here with your real estate news for January 8th, 2026. So today's economic data looks fantastic on the surface. Jobs are stronger than expected. Unemployment rate stayed low. Productivity's up. Labor costs are down. Even the trade balance has moved sharply down. So that sounds exactly what the economy needs. But here's the problem. What you have to understand is good news in the economy actually means bad news when it comes to the Federal Reserve. So when the economy looks strong, the Federal Reserve has less reasons to cut rates. And that's not good news for mortgage rates, homeowners, or even home buyers. So today we're going to break down why good economic news can actually push mortgage rates higher, delay rate cuts, and even change the outlook for housing. So if you're a homeowner, you're a home buyer, maybe you're even a realtor or loan officer trying to figure out what the heck's going on with those. Today I'm going to explain the whys. Good news in the economy is bad news for these things over here. So folks, my name is Dan Frio. I'm actually a licensed loan officer in all 50 states as well as Puerto Rico. If you're in need of a mortgage, I'd love to help you. I'll give you all my information at the end of this video because we have a slogan and it's this: one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? I'll explain that at the end. So let's get to these. So here's what we saw today. The opening bell gave us this news. Layoffs pace in December hits the lowest levels since 2024. Now you're going to say, okay, Dan, that's only a year ago. But let's kind of take a deep dive into these numbers. So the first thing we want to look at is right through here. The Federal Reserve, why have they been cutting? Well, they haven't been cutting because of these over here, because they know inflation's higher than expected. But they're saying, okay, we have to basically protect ourselves from a deteriorating job market. So that's why the Federal Reserve's been cutting. So think of it that way. Okay, so they're thinking the jobs market's going to be terrible, so they're cutting. Well, let's get over to today's economic news that might show otherwise. So here's what I mean. If you look at the continued jobless claims, that's what we've been looking for the last couple months. I wanted to see if that spiked over 2 million because we've been at about a 1.9 factor for a long time now, and it's staying right there. But then if you go down to initial jobless claims, last reading was 200,000. They thought it would jump to 213. It came in at 208. Then you look at another piece of the puzzle, unit labor cost, minus 1.9. Now this number was 4%. Then it got adjusted to negative 2.9. So we got labor cost coming down. We have the job market pretty steady right now. Consumer expectations on inflation's there, and we're going to get some other things. But tomorrow we're going to get actually the new unemployment rate, and they're expecting this to tick down. So now you think of it, okay, the Federal Reserve, they're cutting rates because of the jobs market's getting bad, but now the jobs market's looking a little bit better. So what's the Federal Reserve going to do? Let's get over to the bond market and see the instant reaction to this morning. So if you go over to here, this is how I figure out what's going on with mortgage rates. Right through there, that bond. It's a mortgage bond. So the rate or the yield on that thing affects your mortgage. So here's the only thing you need to understand. See that number up through there? It says 101.45, and then next to it says minus 0.05. All you have to understand, if the bond price is going down, that means rates are going up. So today we're going to have rates maybe tick up just a little bit. 0.05 shouldn't really do anything. But that's what we're seeing in the market so far today. So all you have to remember is good news in the economy is going to be bad news for mortgage rates. So that's what we're looking through there. I do have to do a public service announcement. Okay, folks, I don't get paid for this, but if you're looking for a car loan or a mortgage, please go to optoutprescreener.com. I got a call yesterday, and I used to do this as my public service announcement. And a young man said, Dan, I did this, and then you pulled my credit the other day, and I got 35. And I actually got him on the phone. He was talking to Alan. He got 35 solicitation calls. Again, we can get better rates. They don't even know anything about him. So if you want to stop your financial data from being sold, here's what happens. When you put in your mortgage application or your car application, what happens is the agencies, the credit agencies, has the ability to sell your data. Go to optoutprescreener.com, scroll down and just I click the one that says electronic for 5 years. I don't get paid for this, folks. I'm just protecting you guys so your financial data isn't sold. So now let's get back over to what the heck I do for a living. So folks, what I do is I come in and explain to you guys what's going on with this each day. So what I'm thinking today, if you're a homeowner, what should you be doing? Well, go to my website. Here's a thing I created right through at the rateupdate.com. I actually created that link up through there. It says RateWatch 2.0. Because if you're a homeowner, you're probably thinking, okay, Dan, I watch these rates go up and down and up and down. Does it make sense to refinance? And I keep missing it because rates drop a little bit and then the next day they're up. So what can I do? fill out your information right up through there. Give me all your mortgage information. Then what rate would you be interested in refinancing? We don't sell the data. I'll call you, text you, email you. I'll pester you to go over those numbers to see what the new payment's going to be, what your savings is going to be, and the biggest thing, what your costs are going to be. So what your break-even point's going to be. If it's under a year, probably a good idea to do it. But let's get over to here. Here's what my thoughts are, what's going to go on with mortgage rates. I think today they're going to be a little bit up and down over the next few weeks. But if you're looking to lock in, maybe you're looking to buy right now, what should you do? Well, in the short term, just lock in. I don't really think anything's going to go on over through here, especially if you have a mortgage rate now at over 7%. Reach out to us. The average person right now is saving 1.3% on their rate and over $500. But if you're looking to, let's say, build or buy down the road, what should you do? Well, the first thing is subscribe over there, because every day I come out and give you all this financial news on what's going on, the economic news that's really affecting these things. So what we had today is the unemployment rates, the productivity, your labor cost. Those are all good news. So mortgage rates might jump a little bit today, but nothing out of hand. So if you're looking to close within 30 days, just lock in, make sure you reach out to us and just go with it. But if you're locking in or you're looking to close, maybe you're looking to buy a house in the spring, maybe looking to build, should you get nervous? Remember those people in 2021? They were putting in contracts with rates at like 3%. Yeah, rates were 3% back then because the world closed down. Remember, bad news is good news for mortgage rates. And that's what was really bad news because the world shut down. So if you're looking to close down the road a little bit, here's what I think is going to happen. We're going to get a whole new cast of characters at the Federal Reserve. So next month we have one Federal Reserve member. He's going to take an early retirement. Yeah, an early retirement. Then we have in May, we had the Grand Poobah of the Federal Reserve. He's actually retiring. His term is up in May. So by June, we're going to basically have a whole cast of characters at the Federal Reserve. So what do I think the Federal Reserve is going to do down the road? Well, let's get over to the CME group. They actually tell us or give us a hint on what the Federal Reserve is going to do at the next meeting. Actually, meetings through the whole next year. So the probabilities of the Fed rate cut in 20 days, that's what they're going to meet. Scroll right down through here. There is an 88% chance now, based on these labor numbers, they're not going to cut rates. They're not going to do anything at the next meeting and even the next meeting. And now it's even saying into May, they might be cutting. Why? Well, because this news just keeps getting better and better and better. So good news, folks, is bad news when it comes to mortgage rates. So now they're saying the Federal Reserve, there's basically a 90% chance they're not cutting at the next meeting because the economic news is starting to get a little bit better than expected. So I've been calling that all along, folks. So I'm still staying with my projections. I'm thinking rates long-term are going to be between 5.875 and 6.25. So if you're looking out there, like I said, if you're looking to build or buy in the spring, what should you do? Don't do anything. I think rates are either going to be flat as a pancake, maybe a little bit lower than where they are today. So we do have some calculators down below that we posted. One will give you the cost of if you're a homeowner. How much does it really cost you to wait till next year see if rates do go down? So we have a calculator down there. And then we have another cool tool for home buyers down there. So just click in, put in all your information. Then at the side, it'll say, these are all the loan products available. I bet you didn't even know half of them were there, and which ones you may qualify for. And then if you want to take the next step, just click it, schedule a consultation with me or Alan. We'll walk you through this entire process. So that's it for today, folks. Alan and I will be live today to go over how we do this, our slogan that I talk about each day. And what's that slogan? Well, my slogan is this: one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, here's my website. When you put in your application, what we're going to do is we're going to get you approved. That's the easy part. Then what we're going to do is, why do you reach out to us, especially when we're called the rate update? You're looking for the lowest rates, the lowest fees, and guidance throughout this whole process. Well, here's what we do. The bank I work at provides me a license in all 50 states as well as Puerto Rico. But here's the cool thing about all this. The bank that I work at also is like, okay, we want to be the most competitive bank in the whole country. So here's what we're going to do. We're going to set up with mortgage companies, credit unions, even banks. And they're set up with over 30 of them. Why? When you get approved with us, what we're able to do is use those different banks, lenders. We can use their rates and their programs. The thing, putting in your application here is like putting in your applications with over 30 different lenders, and you'll work with yours truly during this whole process. So folks, now hopefully you understand good economic news isn't always good news when it comes to housing and real estate. So today, hopefully you learned a little bit more of what's happening with those and why. day. So folks, if you need any assistance with a mortgage, please reach out to us at therateupdate.com. But I will be live today at 2 o'clock going over how we show you we basically pull the curtains behind the screen to show you how we do that. Compare your loan with over 30 different lenders. Join us then. If not, we record it, but if you would, subscribe over there so every time I post a video, you get an alert. And other than that, I will be back here at the live event. And after that, I will be here with the closing bell at the end of the day to let you know what happens with all this mess and where we close for the day. So thanks for watching, folks. God bless. Have a fantastic afternoon. Can't wait to see you here at our live event or at the closing bell to see where these things take us for the day. Have a great one, folks. Bye-bye.